If the IRS ever asked you to prove your numbers, would you be able to? I'm an enrolled agent, a federally authorized tax professional with over 14 years of experience in tax and accounting, and I focus on helping home care agency owners understand their numbers and stay compliant. When you file your taxes, you're not just reporting numbers. You're expected to be able to support those numbers. And this is not optional. The IRS places what's called the burden of proof on you as the business owner, which means if you cannot prove an expense, the IRS can remove it. And when that happens, you end up paying taxes on that money, plus potential penalties. And this is why many business owners don't realize they have a problem until it's too late. So let's break this down simply. For any numbers on your tax return to hold up, it needs to answer three things: who was paid, when it was paid, and what it was for. That's what makes a record strong. Now, here's where many home care agency owners get in trouble. A bank statement alone is not enough. It shows you spent money, but it does not show what you actually purchased. For example, if you spent $50 at a store, the IRS cannot tell if that was for your business or for personal use. That's why itemized receipts matter. Now let's talk about income. The IRS expects you to track all of your income. This is called your gross receipts. For a home care agency, this can include private pay clients, insurance payments, and reimbursements. But here's a common mistake I see. Some owners deposit their own money into the business to cover expenses like payroll. If your records are not clear, that deposit can look like income, and that can create tax problems. Now let's talk about expenses. For a home care agency, there are certain areas the IRS looks at more closely. These include supplies, caregiver payroll, and mileage and travel. For supplies, you need itemized receipts to show they were ordinary and necessary. For payroll, the IRS expects to see proper classification and complete records. For mileage, estimates are not enough. You need a written log with dates, locations, and business purpose. And here's another important area: employment records. For businesses with employees, the IRS requires you to keep payroll records for at least 4 years. These include things like employee information, wage records, and tax filings. For home care agencies, this can become a challenge because of high turnover. Now, here's something most business owners don't realize. Audit protection doesn't start when you get audited. It starts with how you keep your records every single day. If your records are clear and consistent, you're in a much stronger position. If they're not, you may struggle to defend your numbers. So this is not just about staying organized, it's about protecting yourself. Now that you understand what the IRS expects, the next step is making sure your system is set up correctly, because that's what makes all of this easier to manage.